Greg, what do you make of this? Do you think we should pay more attention to sort of this more relief feeling that we're experiencing today, or look more at the volatility earlier in the week for what may portend in the near term?
Yeah, I think I would agree with Mike in the long term, but in the short term, I probably disagree a little bit. I think these yields tell the story, and they've continued to rise, defying what the equity markets are doing. I think this is a short-term relief rally. The only thing that's changed between now and Monday is that we've kicked the can down the road about 4 to 6 weeks on what is likely to be a raucous debt ceiling battle. And so the inflationary pressures are still intensifying. Wage pressures are still intensifying. We're about to have a quarter where we hear lots of companies complain about labor prices, about raw material shortages, component shortages, and I think that's going to be the news cycle over the next 3 weeks. And so I don't see anything that's going to continue positive sentiment once this relief rally is digested.
Yeah, and that's a very interesting point. I mean, Cowen, in fact, actually taking a deep dive into the retail supply chain as the ongoing disruptions really remain a big headwind for the sector. But also beyond that, the firm says price increases can mitigate recent input cost inflation, while full price sell through that environment, they believe at least, will remain strong. Cowen naming Lululemon, Dick's Sporting Goods, Yeti, Figs, Under Armour, and Deckers Outdoor brands as their top ideas. And Greg, as the retail reporter, I've, of course, been following this very closely. It is easier, certainly, if you have economies of scale and you're a bigger company, you have more levers to pull, and you sort of have more sway, frankly, with the members of each layer of this global supply chain. But you're saying this is going to be perhaps the theme of the next few weeks. I imagine it'll be the theme of the next few months, maybe even another year.
I think that's right. But you pointed out something that's important, is that for stock pickers, we get the opportunity on this next quarter to dive in and see who's prepared their inventory levels for this coming holiday season, knowing that shipping was going to back up, knowing that rates were going to increase, knowing that they can only pass so much on to the consumer. We'll get to see who has made travel arrangements and partnerships to secure that space for their shipping, as well as their delivery, who's been able to shorten that window, that duration, to match Amazon's next day. And so this is where we'll get to see who's really prepared their business for this. And I think that there'll be some winners here. For me, while they picked those specialty names and they've worked this year, I'm looking more at the value-oriented retailers to work from here, particularly as these inflationary pressures increase. And Walmarts and Targets of the world have done a lot to integrate delivery and inventory levels into their equation.